FXEmpire. This is Chris taking a look at the US dollar, Japanese yen, and as you can see, on the weekly chart, we have rallied. We've given up some of the gains. Makes a certain amount of sense. As you can see, we are in the midst of a area of consolidation from before, so not a huge surprise what's going on, that we're struggling for a little bit of direction. Next week, we have the Federal Reserve meeting on Wednesday. That is going to be huge to determine where this market goes next. With that being the case, a lot of what I think is going to happen is you're going to have to pay attention to those 10-year U.S. Treasury, 10-year JGB spreads. Now, the 10-year JGB is going to be 25 basis points regardless of what happens next, because the Bank of Japan is doing everything they can to buy, to keep those interest rates down. In order to buy a bond, they print yen. That's what's happened all year. Now, as pressures around the world drop, interest rate differential drops, it makes the dollar a little less attractive against the yen, and it puts less pressure on the BOJ. And that's when you get this. Now, having said all of that, this move that we've seen this year is still about a 15% loss for the yen. That's a man-sized beating. So with that being the case, I do think eventually we continue the uptrend unless rates drop drastically. We are probably going to stabilize at higher for longer. So it's a matter of finding our footing. If we can take out this top of this candlestick, I think 140 is a realistic target. After that, if we go lower, then maybe 132.5, which you can see has been very important in the past. So interesting setup. The end of next week will probably tell us a lot, especially as we head into the illiquid end of December.